If your determination is fixed, I do not counsel you to despair. Few things are impossible to diligence and skill. Great works are performed not by strength, but by perseverance. Samuel Johnson. My friends, each and every day, 10 to 15 minutes, that's all we ask. If you will just persevere, if your determination is fixed that you're going to master the charts, don't despair. It is not impossible. You can do it. Diligence and skill. You will develop the skill with the diligence, with the perseverance. You can do this. I'm sorry for us not getting things posted to the website yesterday. We had a virus that took our website down. It is back up at Charting Wealth. Of course, everything was posted as promised, as always, on YouTube, but we did not get the email out because the website wasn't working, and that's where it comes from. So thank you for your patience. Everything's going as planned yet again. Now let's look at these charts and see what there is to learn. And folks, it shows you the brilliance of our plan. That is using the weekly trend to set up our plan and to move forward through time using the average true range on this 2-day chart, 1 times average true range to set up our profit and loss bands. And of course, as we have been talking to you, we closed half of our trade after we hit the profit of 1.62%. We jumped out of half the trade. We let the rest of it ride. And of course, now things are pulling back up through there. And of course, we pulled our trade when we hit that band this morning. We zeroed out in the AM, and things then continued to rise in the afternoon, up 1.45%. We've gone from a doji to a green candle, broken our trend line. We'll continue to see. Now, if things rotate back over and go back down, maybe we'll have another jumping in point. But if you look back in time, this is what I really wanted to show you today. You can see the brilliance of the reason that we adopted this idea of using the average true range on the 2-day chart in conjunction with the weekly candles showing us reverses here, because of course you see here, now again, we could have made a little bit more, but we didn't really know how much more. So we took our profit at the 2.88% on the first up move here on this weekly trade that initiated back on the 9th of January, went up within 3 weeks. We hit that 2.88. We then saw things move back down. We pulled out of that trade. We entered on the down trade. And of course, 2.63%. And look, soon after that, it rotated right back around. That's when we jumped back in, took 2.7%, and then let the other half ride. Now, you might say, why don't you just take the entire amount each of those times? You can do that, but we would have missed out on the roughly, 12% rise here over those weeks. So we're taking half the trade, profiting from that, letting the rest of it ride, and we can use the market's money if it does pull back on us and we don't get out in time. There's almost always plenty of room to, again, not take a loss, because what is the thing you learn from trading year after year after year? Losses kill you. First rule of trading, don't lose money. Second rule of trading, make money. And the way that we've set this up with the always winning formula is with this one-time profit that we take based upon the average true range, which is just the average range over a 14-period time. And we use that to set our profit and loss bands. Again, just part of our training that we go through every day here for you. And of course, we see these markets kicking back around. You might say, Tom, why is this happening? What's going on great in business? Don't we have a war going on in Europe? Don't we have crazy inflation that is just sitting there? Don't we have a potential, not depression, but recession staring us in the face? You hear that all the time on the news, but we've so inflated our currency that you see things like this occur. We have the plunge protection team that doesn't let the markets move down at crazy paces. We have all sorts of government interdiction into the markets. So what do? We just watch the charts and we trade with them. Now, again, we're not a stock calling service. We're an education firm. We want you to practice with us. Prove this to yourself in practice trades. See if it works for you. I just ask you to do it. We show you each and every day what it is we do. And we show you now that what? We have seen this market turn around on us. That's fine. We pull our trade after making the initial profit and we move on and get ready to set up for a potential up trade. Are we ready to do that? Absolutely, we're ready. The way we've been practice trading these things is looking for an entry point on Friday. And you notice that when I give you these examples, I use the worst time frame in the jumping in point in order to set that up to see how well it works. Is it perfect? No trading is perfect. But again, as long as you maximize your wins, minimize your losses, you will see success. But prove it to yourself. Prove it to yourself day in, day out. So we see things pulling back up substantially, 1.45% today for the S&P 500. We go to the NASDAQ 100. What do we see there? Well, again, we pulled that trade after a 2.43% profit. I say we cashed out half of that trade and then let the rest of it ride. And of course, what have we seen happen? We saw things again bump up, could have pulled out anywhere in here. Again, when we pushed above, we did not. We didn't hit the line. We moved back down. We shot up again. And of course, we have hit the point in the afternoon, actually in the morning too, where we needed to pull that trade. Now, if you stayed in that entire time, what did it do? It took that profit from you that you initially had in the first half of that trade, but it zeroed you out with no loss. So again, do we want to give that back? Of course we did not. We did not. But at the same time, we have lived to continue to trade another day. And I just point back to you in time how beautiful this run-up was for us and the continuation of that. And a decent trade here too. So again, keep those things in mind. It is over time that you bank it. And you have to be in this market each and every day paying attention, running the numbers, doing the practice trades, proving it to yourself. Now, let's go on to where we are on 20-year bonds. We see those pulling up also, 1.04%. Of course, we are now moving into the red zone after, again, a 2.45% profit in the first half of that trade with the candle going green here. Of course, we're only on Wednesday. Could you stay in? Yes, you could. You've got a little bit of profit here to play with. If you think it's going to move back over, we're looking at where the volume is here. This is just the first day of the latest 2-day candle, low volume yesterday. Again, this is what practice trading is all about. Learning, watching, making decisions, and see how they play out. Just because this candle is going green and breaking the trend line does not mean that you necessarily have to pull it. You've not hit, you've not pushed all the way through the red line here, what we call our loss band. We're above the profit band at this point. So again, what decision are you going to make? What are you going to do? Are you going to let this ride to see if it rolls back over? Or have you seen enough with these 3 candles moving up? But again, pay attention to the volume here. Pay attention to the volume here. Is that enough for you to pull the trade? If it is, then justify it. If it's not, then justify why you're going to stay in and pay attention to what goes on throughout the course of the day tomorrow. Very important that you do that. What's up with gold? Gold also pulling up. We talked about this going into the third up candle on the 2-day trend line. And of course, approaching that point where, you are going to hit your loss. Now, the problem with gold, as we have talked about, is when we look at where gold came, we never hit our profit band here. So we never cashed out half our trade here. We are literally letting the whole trade ride into the negative. That gives you every reason, as we discussed before, when you don't tap out and take your profit and things start moving up, going against you with that first green candle on the 2-day chart, that's a good signal for you to go ahead and potentially pull that. Now, we saw where things rode up to the line, down the line. Then when it passed through it again, that's probably, again, when you see it pull back and then move up again with that kind of volume, that's telling you danger territory. So that's where we are on gold. Lastly, we will go to Bitcoin, really rebounding. Now, of course, we've not been doing anything in Bitcoin. We've been waiting for what? We've been waiting for it to pull back for a while. It has been for a while, hoping that things are going to set up nice at some point for a big green up move. This 1 day of up movement, even with all this volume, as you can see it here on the 2-day chart too, doesn't mean that, we're still below the weekly candle, is still below the weekly trend line there. We're still below the trend line on the 2-day candle. The half-day candle has pushed above. We're going to need some more confirmation in Bitcoin before we pull the trigger on an up trade, on a practice up trade there. Things are complicated. This is not easy. This is what it's all about, is watching these charts and learning through thick and thin. Over the last few weeks when the markets were just cruising up, that was easy, my friends. When they pull down and then start to pull back up on you, this is the crunch time. This is where you learn. This is where you stay paying attention to the markets, practice trading, making decisions, justifying those in your show notes and understanding why you did what you did and making sense of it in your after action report. Very important. This is when you learn the most. We always love to hear from you. Don't hesitate to reach out to us, cw@chartingwealth.com. We always love to hear from you, my friends. God bless. All the best from the whole team at Charting Wealth World Headquarters.